DailyByte of December the 19th, and a sort of a market mayhem kind of a day was expected today after the crazy fall in the US markets last night post the Fed rate cut. A lot of expectations were there that it's going to be a bloodbath in the Indian market. My sense is that it wasn't so bad. Yes, there was a gap down, but the market stabilized at that point through the day. So we will talk about this in today's market, how Fed's hawkish stance has hammered global markets and Indian market also to some extent. But there are positives to be taken from that as well. Please do read the disclaimer and do subscribe to the channel if you haven't so far. So let's look at the market. So Nifty exactly coming down to this previous important bottom here near 23,870 and staying there for the entire day. So you can see there the day candle is very, very short. It means that the open and close and the high and low of the day were all within a very narrow range. So once it gapped down, it didn't really keep going down. I mean, it just stabilized there. And incidentally, I should have shown on this chart, the 200 DMA on the Nifty 50 index is also exactly near there. So that may be another reason why the market has stopped there in for some time at least, in case we are going down further. So the trend, of course, has turned down. There is no doubt about it. This rally that we had for almost 4 weeks is certainly over, and we will have to create some base at some point of time, maybe at this support or maybe here itself. I don't know how deep this leg can go. I mean, if this is a continuation of this leg, then we may go further down to even 21,300 in the next 3 months. That is also a possibility that exists. So without trying to call the market on the higher side, in any situation, one should look at where is the trend. So the trend for the very short term has turned down. For the long term, the trend is sort of flat. I mean, since the last 6 months now, we are at the same place where the market was. We've gone up, we've come down, we've gone up, we've come down, we've gone up, we've come down. Maybe we will go down further. It is a possibility. Nifty down 1% for the day. No, I would still say not so bad, given that before the market open, people were talking about a bloodbath kind of a situation. 1%, nobody likes it, but it was not really the worst day that you've seen. Nifty next 50, the chart looks promising. The market opened near this 70,000 mark and then climbed back through the day at 70,600, losing 0.88%, but still there was some effort to climb back, although the short-term trend is again certainly very much down. The mid-caps recovered almost fully, which is somewhat reassuring for sure, that 0.24% only is lost in stocks which likely to be hit the most whenever fear happens in the market. So this time you would have noticed large caps are falling more and the rest of the market is not falling as much. So mid caps down 0.24% and small caps also down 0.34% only. So in both mid and small caps, you can see that the open was the low of the day and the entire day was recovery from there. It certainly does not mean that it cannot fall again, but for today the markets were extremely I would say premeditated that any fall will get bought into mid caps and small caps, and people just did that in the morning. So I think on a mid cap and small cap front, the market is still looking decent, I would say, and not looking very weak, although the very short term trend is certainly down. Bank Nifty opened gap down and closed right there. So again, very similar to Nifty, a shortish candle, minus 1.08% on the day, and really no major attempt to pull back. The gap remained where it was. Advanced decline ratios 165 to 334. So again, you can see while it is, the advanced decline is skewed towards declines, but it is not like 450 is to 50 or 400 is to 100. I mean, it is still a healthy 165 advances to 334. So yes, bias is towards the downside, but a reasonable, healthy outcome from the rest of the market. Nifty, of course, was awash in red. You can read all the names here: HDFC Bank, ICICI Bank, TCS, Infosys, Reliance, JSW Steel, Asian Paints, all hammered down 1 to 3%. Bajaj Twins down, Mahindra Mahindra, Titan, ITC. Levers was one stock which did not fall today, so maybe it has fallen already quite a bit. Cipla, Dr. Reddy's, Sun Pharma, these were the stocks that were actually going up. So defensive stocks, and within defensives, pharma took the lead in the positive direction. Nifty Next 50, also you can see some pharma stocks are green. Torrent Pharma, Zydus Life, Divi's Lab also not much down. But you had some deep cuts in LTIM, Pidilite, Hindustan Aeronautics, Naukri, ABB, Adani Green. So Adani stocks have been falling almost on a daily basis after the jump post the Adani crisis that we had recently. So we'll do another session on Adani and see where these stocks are standing. And many of these stocks have already given up more than half of that gain that had happened from the bottom. Geo Finance also losing almost on a daily basis, 3.5% down. PFC, Chola Finance, Union Bank all down uh, for the day. The sectoral trends are all red except pharma. Pharma has maintained the green end of the market, plus 1.7%. Actually, very impressive that on a day like today, money is moving into pharma. IT, obviously, on the back of Nasdaq losing almost 3% plus yesterday. IT stocks were going to bleed, which was known. But again, IT has done very well in this 1 month, is still up 7.7% for the month gone by. Real estate, you can see on a day like this, if the market was giving up its current undercurrent, you would have seen 3-4% cut on real estate. You would have seen at least 2.5-3% cut on metals, but that has not happened. So I think this today's fall is more of a fall in line with where global markets were. And I think if global markets stabilize in the next day or two, at least this fall will get recovered in the next few sessions. That is my sort of reading of it. I could be totally wrong, of course. Pharma, you can see here on the chart, is trying to build up, and it is now uh, almost at a 2-month high now, which is very impressive given the state of the markets. So 5.4% on IPCA, almost 4% on Dr. Reddy's, Abbott India, JB Chemicals, Lupin, Mankind Pharma, all doing very well. And pharma seem to be coming out of this slump and actually going above this resistance that is there. And this current trend line is which is waiting to be crossed here. In the stock spotlight, we have KFin Tech up 7.5% today. So this, despite other IT stocks slumping, this stock has really taken the lead towards a new high. And you can see from nearly 260 rupees in April last year, within a span of just maybe 21 months, this has gone from 260 to 1429. So amazing kind of a run. We hold this, disclaimer is that we hold this in several momentum portfolios, and the stock is doing well. Fed's hawkish stance is hammering markets. That is the discussion, and this was the situation in the US markets. So S&P 500 just collapsing as soon as Powell spoke on the Fed rate cut. So the Fed has cut 25 basis points as promised, but as promised does not mean that markets will not move. You are actually seeing a sell-on news happening in this situation where the market was expecting quarter percent cut. It happened, but the additional hawkishness that came through was for the forecast about the next 1 year. So market was expecting 4 cuts in the next 1 year, and the indication now is that there will be 2 cuts in the next 1 year, thus indicating that the economic situation is not so good. Inflation is still high, and rate cuts are getting difficult. So that is something that really broke the back of the, at least the short term and intermediate term bulls, and you can see how brutally the US market was falling yesterday. 2.95% on S&P 500, and you can see as soon as the Fed speak happened, and it was just down from there. Nasdaq also down 3%, 3.6%. So when such events happen, then everything else takes a backseat. Earnings, valuation, blah blah blah, all that does not matter. Then it does just matters who wants to get out, what is the demand in the market, where will it settle. And you can see that entire last few hours, uh, the market was down, and today is that acid test where whether market will stabilize here or the US markets will further fall. So the news was that there was a 97% chance of Fed cutting interest rates by 25 basis points, and this was the last cut of this current calendar year. So 100 basis points was cut in 2024, and markets are pricing in the Fed decisions well before they are announced. So you can see here, this blue line is the 2-year yield in the US markets, and this orange stepped line is the way the Fed fund rates have moved. So Fed fund rates from March, April 2022 have gone from near zero to almost 5.5%. And then from second half in this year, they have been cut once, twice, thrice, and four times. 50 basis point once and two of 25 basis points. So now sitting at 4.5%. But you can see that from the moment the Fed cut the rate the first time, this in September, you can see that the yield started to go up, and the yield was falling much ahead of when the rate was cut. So the markets will adjust much ahead of the news when it comes. And this is the repeated assertion that I keep saying, that this is market always does a bhav bhagwan che a strategy where the price is already discounting what is going to come. So on this day, if somebody decided that rates are cut and hence I should be buying bonds here, then he's already late. Actually, the yield has risen, so bonds have fallen in the last 3 months in a big way. Whereas a person who would have seen this cut and then decided to buy bonds would have been decimated, by now basis that thesis. So always, if you are seeing some news, more often than not, it is already discounted. Market has already, knows about it. It has adjusted for it. So what has Powell said? We'll go through some slides to get more color on what is happening. So future rate cuts will depend upon the progress of inflation, which has been stagnant recently. Uh, the labor market is reasonably strong, but lowering inflation is what their target is, and that is not really happening. Employment rates are less tight but still low and enabling a cautious rate. So they have given a cautious to a hawkish sort of stance for the next year. A slower pace of rate cuts reflects higher inflation readings this year. So what market was expecting is that they are going to cut in the next year, maybe four times. But his speech sort of sounded hawkish, and market is now expecting only two cuts in the next 1 year. So the 2% inflation target that they've always been happening is in my view not happening at all. And maybe at some point of time the Fed may have to say that, okay, we are giving up this 2% target inflation, we are not able to achieve it, let's keep it at 3 or let's keep it at 4. And that is not such good news for the US markets. Now the dollar index has been rising like crazy, and this is exactly where the first cut had happened. So despite the first cut happening, the US dollar is rising like a phoenix, and it has almost gone to 108 today. Whenever the dollar is rising very strongly, that means the gush of money is going from non-US assets into US assets, and that draws out money from emerging markets, that draws out money from precious metals, and none of these markets will perform very well until the dollar keeps rising like this. So the dollar needs to fall for those markets to do well. And the rupee also in the same flow has hit a new low today, 85.05 or 85.06. And this is going to exert even more pressure on emerging markets, and rupee is just showing that. Now what are the problems of a weak rupee is that because the depreciating rupee reduces foreigners returns when they're converted to home currency. So somebody has bought India when rupee was 80, and now rupee is 85. So they have actually lost almost 6-7% of their home currency value just in this depreciation. So this can actually reduce induce foreigners to not come into India until the rupee stabilizes. Because who wants to just give up some margin on the currency when they are seeing that the rupee is continuously depreciating? And some people, the experts in the forex part of the market, are saying that it is going to be difficult to stop the rupee in the next many weeks. Uh, of course, we are reliant on higher imports, oil, gas, chemicals, electronics. So this will negatively impact profit margins and also our trade deficits going forward. There are sectors that can be impacted are IT and metal. So robust dollar can impact profitability of IT firms that earn a significant portion of their revenues from the US, in the sense that a lot of back shifting of work also can be done with the latest AI stuff happening, that a lot of jobs can always go back to the US, and that is what the intent of the new president is. And metal companies may face higher costs for dollar denominated imports that they do. So having a unstable or a weakening currency is is a need of the hour for India right now, because yuan is depreciating like crazy. Brazil is depreciating its currency. Euro is falling against the US dollar. So everybody is falling against the US dollar. So RBI cannot hold the rupee here, because otherwise we keep getting uncompetitive versus other markets on a day-to-day basis. And in fact, President Trump has announced that he wants the US dollar to become weaker than the other currencies. So now it's a war of currencies that are happening. Who is going to depreciate more versus each other? And I don't know how this is going to sort out, but it is going to be very, very difficult for US to convince all these countries to not have a depreciation versus the US dollar in some way. So this is where we are. What is your view about the markets? Do share in the comments. And I'm not so bearish about the markets, but yes, I mean, the worst case scenario in my mind is 21,000 on Nifty. I hope we don't go there, but that's the sort of the June low that we hit. That is the sort of the worst case scenario in my mind on the market. I don't think we are going there, but Nifty and the rest of the market are probably going to not go in conjunction with each other, and mid and small caps likely are not going to go deep in the red, if even if this bloodletting were to continue on the Nifty. That's my take. Thank you so much for watching. Do like and share this video with your friends and family, and subscribe to the channel. Thanks. Bye.